watching the housing market. It remains quite strong. In fact, new home sales today came out and beat the expectations. Now, will rising mortgage rates derail the spring housing market season? Let's bring in our expert panel, Erin Sykes, Chief Economist, Nest Seekers International, and Rogers Healy, owner, CEO of Healy Global Relocation. Erin, I'll begin with you. We got our new home sales data in. It shows continued hot housing market. Now what?
Well, we saw through Case-Shiller that prices were up in December 10% over November, which is unbelievable. It's the fastest price growth we've seen in a generation. Now, that said, we also still continue to have an incredible shortage of inventory, which is making it less likely for sellers to actually jump on the bandwagon, because what's happening is, even though people know that they can make an incredible profit on their home right now, they might not have anywhere to move into. So we need to see this level out. And what we're going to see is a slight tick up in mortgage rates. We're at just over 3% right now, up from 2.25%, but still 3% is considered historically low. And it will help the rate price equilibrium start to reset, which is what we should see beginning in the spring. However, overall, the housing market will continue to be hot, not only in the suburbs where we've been seeing it, but also the movement back into the cities.
Yeah. And, you know, Rogers, you made the same point about, and it's something that we're all talking about, is that you do have such a slim amount of choice, right? You said in January there were 26% less homes in the market than that of January 2020. Why is that, and what does that mean for housing? Buyer's market, seller's market, what does this make to you?
I think it's just a market that we haven't ever experienced. Like she was saying, you know, this is something that is unprecedented, you know, much like the last year and a half of our world in general. And so January normally is a month that is a little bit slower, and it's kind of the ramp up for the spring. But, you know, a word that we were using here at our offices last year was sprummer. It was like a spring and summer market from, you know, April and May all the way till current day. So I think people are going to have to make decisions here quickly. And maybe, like she said, a 3% interest rate is still the lowest interest rate we've really seen consistently in decades. So we're going to see, you know, a lot of continued confusion. But I think there's people that are still waiting, that whether they move into the suburbs, the urban core, et cetera. The other problem we're facing is rental rates are also increasing to a historic high. And so when this kind of stuff happens, people have to go make a decision that might not be the best long-term decision, which is going to provide opportunity for us in 2 to 3 years as well.
So, Rogers, just to clarify, I mean, you made the point, right? You're seeing the supply is slim, to your point, but right. And it's like sprummer, right? A constant. It's right. Unprecedented times. But if rental rates are on the rise, supply is slim. Do you think that the whole thing slows down, Rogers, because people may not want to put their house on the market, because even if they do, they might have to just still pay more, even if they try and rent or buy something else?
So here's the thing, life doesn't slow down, even if you want it to. And a lot of reasons people move, it's for historic reasons for moving. Maybe they need to go and have larger property for their children. Maybe they need to go and have a separate property because of a divorce, you know, and we've learned that death, divorce, and debt are the reasons that we have generated opportunities. So I think we're going to see stuff that's going to change, where we've always talked about location being the #1 rule of real estate. I think it's going to be affordability. And I think when you see these things start to shift, and as far as trends are concerned, we're going to have a whole new real estate market for the next 10 or 15 years.
So, Erin, what do you think? I mean, do you think that that's true, and that, look, life doesn't stop and things will continue in this way, or at least mostly in this way? The hot market continues?
I do. And a couple things to take note of. For every 1% increase in a mortgage rate, your buying power suffers by about 12%. So we still have a little bit of space there until we hit 5, which is kind of that transition zone between low and traditional mortgage rates. That said, I agree with Rogers in that people are still going to pass away. They're still going to get divorced. There's still going to be consolidation. We have seen a lot of people taking 2 homes and selling them and then moving into one larger home. And we've seen the opposite happening, where people are taking money out of the stock market because they're thinking it might be close to a peak, and they're moving it into alternative investments like real estate, jewelry, boats, those types of things.
Right. And final, I'll give you 10 seconds, Rogers. Do you see people investing in REITs or home builders or?
Yes, and I think to Erin's point, I think tangible investments right now are going to be the safest and most secure. And watch out for the millennials. They're the biggest home buying demographic in the country right now, and I think they're tired of renting, which again is going to give us additional opportunities. So yes, the tangible investment will always trump the clouded investment.
Yeah, thank you both so much. Great conversation. Rogers and Erin, I really appreciate it very much as we talk about this hot housing market. Erin Sykes, Chief Economist, Nest Seekers International, and Rogers Healy, owner, CEO of Healy Global Relocation.